This segment of Bridge Street is sponsored by Retirement Income Analysts.
Believe it or not, we've passed the halfway point of the year, and this morning we're taking a step back and looking at the big picture, specifically how the stock markets are affecting your retirement funds. We're joined this morning by Chip Coughlin with Retirement Income Analysts. He's a registered rep with First Allied Securities. And Chip, I guess we could say that this is sort of like the halftime report, right?
Exactly. We're halfway through the year. Let's see how we've done. We've done some planning. Let's hope everybody out there has done some planning. We're part of the way through the year. Let's see how it goes.
So what should we be looking at in terms of looking at that halfway report and how we're doing?
Okay, number one, you want to see how much you've put in.
Okay.
And you want to see how the markets have done for you over that period of time.
All right. So let's talk about the markets then. How is this year going in terms of stocks and the markets?
It's been a pretty volatile year.
Oh, okay.
If you think back to the beginning of January, China and oil, the first day of trading in January, took the market down, and it took the equity markets almost a whole quarter to get back even.
So then how does that affect somebody who's, saving for retirement or, putting money in? How should they look at that, and what should they do? What changes should they make? Okay,
great question, because the key issue is time horizon. How long from now will you be retiring? If it's 2 years, we don't want a sequence of bad returns to spoil your retirement.
Okay.
So we'd be on that game already. Okay, by shortening up the returns, taking some of the risk out of the portfolio on a short-term basis. But if you're going to retire 10 or 20 years from now, time is your asset. So you can invest longer term, more stocks, less bonds, take a little bit more risk, because time mitigates risk.
Okay. Now let's talk in terms of the budget, right? Because everybody has a budget. So is this a good time to sort of reevaluate your annual budget?
Absolutely. Halfway through the year, let's see how you've done. How has your spending been? Hopefully you have a budget, and we look back and we say, this is my goal for the month, for the quarter, for the half year, and for the year, and we'll see how you've done. Because you can put in, if you're under 50 years old, $5,500 into your IRA.
Right.
How much have you put in thus far this year? If you're over 50, you can put in $6,500. How much have you put in so far this year?
Now, what if somebody is saving well, right? They have extra money, like they've saved so well that they have a little bit extra. Should you invest that?
Absolutely.
Okay.
Thinking and planning for the future. To have a better retirement, you have to have more money in the game.
So don't take it and say, well, I saved so well, I should, it's okay, I'll just stay on track.
There should be a reward for achieving your financial goals.
Okay.
But it shouldn't be, hey, I met my goals, let's go on a crazy trip. Okay, it should be, let's go to dinner with your spouse or significant other and celebrate, hey, we've done 6 months, we've met our goals, let's keep an eye on the ball and make it the next 6 months. Because year over year, you need an increase in your net worth.
All right.
Because you got to realize who you're working for.
Right.
And I tell all my clients, who do you work for? And they say, well, I work for, and they name some companies. I said, no, no, no. You work for yourself, and you work for your family.
All right.
So year over year gains in your net worth, but you have to look at it on a constant basis.
Always looking, always thinking, always planning.
Right, because your budget will help you make decisions.
Okay, good to know. Some
Yes.
sound advice. You're always thinking and always planning.
There you go.
The good takeaway. Well, Retirement Income Analyst has their offices at 892 East Brighton Avenue in Syracuse. You can also give them a call at 701-4440 or 855-44-RETIRE. You can also visit them online, retirementincomeanalysts.com. Chip, as always, thank you.
Thanks for having me.
And with that, we will be right back.